Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for February 14th, 2010. This is Patrick Ceresna. First off, I want to take a look at the S&P 500 using that SPDR exchange rate fund symbol SPY. The upper focal point we've been observing is that 115 to 116. We've been pointing that one out for several months as an upside target for all these rallies. In the same regards, on the downside, we were targeting some support to come in around this 103 to 104 area, and the previous Friday's intraday low marked a reversal somewhere very close to the 104 area, and since then we've been sort of flagging upwards. Now, even though we've more or less boxed the top and the bottom, we do want to highlight this congestion zone where all of the November consolidation was basically contained to, including the October highs and the brief rally that we had just a few weeks ago that ended in the zone. This is an upside zone that should act as overhead resistance on any rally attempts here. Now, the way we sort of think that this will play out, we're going over that long weekend here. If we see a market that starts to give away, we think that there still is the potential for there to be one more retest back in the zone. We're not looking for a very robust sell cycle to come in. If there is one more sell cycle, more than likely it may be a short-term buying opportunity, not a long-term one, but a short-term swing trade on the upside if we do. In the same regards, we can't rule out the possibility that we just kind of even consolidate just a little bit and make that push right up into that overhead resistance level. That 109 to 111 zone is sort of the target zone for any upside rallies. Now, in the chance that there's a real catalyst motivation to the rally, we can't rule out a push up to 112 or so. We really think it's unlikely that we're going to see a robust rally back to the previous high. So we're looking for almost all rallies to be contained somewhere in these zones. In the bigger picture, we're anticipating this to be a multi-month market correction after a very robust 10-month rally that we've seen. It's very natural to go through a several-month market correction, so we do not believe this is over, even though on the short term we think the downside is marginal. Whenever we finish any upside retracing moves, they probably will set up for another down leg in the marketplace before we see some really solid lows that probably will be where the big buying opportunities will emerge. Next here, I want to take a look at the ISE U.S. Regional Banks Index, which is the symbol JLO, and we've seen some solid strength coming into this play relative to all of the other sectors, and then we obviously had a bit of a sell-off the other week there, but we really are never changed the trend in play so far in the regional banks. The higher highs, higher lows still is pretty much intact, and even though we certainly can't rule out another deeper sell cycle come in if the broader market starts selling, overall we're not as bearish on the regional banks as we would be on the broader markets. We are looking for support lines even in the bigger sell cycle to hold within that 18.5 to 19 area. There's probably going to be some good opportunities down there. On the short term though, this is a little bit of a flagging formation developing over the last 4 or 5 candles. If we have any technical breakdowns below the 21 level and with holding sell-offs there, then it really does open that window for a sell cycle that could probably go to about the 20 to 19.5 range on the downside very easily. In the bigger picture, we're still looking for this to dig in and hold in here, and we're not going to be taking any bearish positions beyond very fast short swing trades. Next here, I want to take a look at the ISE Index, which is a symbol SIN. This is an index of all the casino, tobacco, and distiller companies, and more or less we marked off 2 particular areas in blue here. We obviously had a retracement after support lines really did dig in and hold in that 98 to 100 zone. And we're now retracing back up. That blue box right there marks off the area where the natural retracement will find overhead resistance if in fact there's another sell cycle to come in. So if we see this week a lot of stalling occurring in this area and then the ISE index rolling back down, we'll be looking for definitely a low that comes in much lower than the 98 to 100 zone. We could probably get even into the low 90s on another sell cycle. Next here, I want to take a look at the ISE Home Builders Index, which is a symbol RUF. And overall, during the months of September, October, November, December, we've seen a lot of relative weakness in the home builders, which simply were not performing while the broader market was pushing higher. But subsequently, since we've started this market consolidation, the home builders have actually been rebounding very strongly, and we've continued to see some very healthy price action there in spite of all the weakness we're seeing in so many of the other sectors. I don't want to be overly bullish on the home builders, but certainly they have a lot of relative strength to the other sectors, and certainly there seems to be money rotating into the home builders versus and rotating out of some of the others like financials. So we'll be watching whether or not this can actually technically break out above that 1040, 1060 focal point, which has marked a lot of the consolidation highs that we've seen. If it does, this could very easily make a push towards that 1125, 1150 highs that it put in all the way back in the summer of 2009. Next year, I want to take a look at the ISE Natural Gas Index, which is a symbol FUM. Last month has brought in quite a bit of consolidation all the way down to what we now define as the 95 to 97 focal point on the downside. We're now attempting a little bit of a retracement like we've saw in a lot of the sectors at this stage. And at this juncture, there really isn't any technical evidence that we've going through a major consolidation. But if this was a double top that we saw up along that 113 to 115, the first sign that we're going to go through a bigger sell cycle will be a failure of this rally somewhere in the next $2, $3, $4 on the upside. If in this 105 to 107, 108 area contains all rally attempts, and then we make another major sell-off cycle down toward that 95, 97, we'll be looking for a break of that to begin a much bigger, deeper sell cycle. We're not forecasting that, but certainly be warned that if they can't gain any traction on a rally, the selling will bring that market all the way back down at least a minimum to retest that 95 to 97 zone. Finally, I want to take a look at the ISE Mini FTSE 100 Index, which is the symbol UKX. This chart looks very similar to what we see in the S&P. A lot of the major global indices have very similar patterns. We've now found support to our slightly adjusted 500 to 505 zone. As soon as we reversed off that area, we adjusted the support resistance zone to reflect that accurately. And really at this point, we're sort of flagging back upwards, no different than on the S&P. And literally our anticipation here is no different. Really at this stage, we can't rule out the fact that we can come right back down there and retest that 500 to 505 and some sort of a retest in midweek. But really in the bigger picture, we believe that this on the very short term is the end of one sell cycle. We're looking for at some stage some sort of a counter rally that could maybe potentially go even as high as that 530 to 535 focal point. It may even end a little lower than that, but we expect that kind of a retracement rally to last at least several weeks, and then subsequently begin one more significant sell cycle probably into the March month. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.